Hey traders, John Howell here. Let's get ready for this week. This video is going to be a bit of a technical analysis update, but I also want to give you guys a bit of a slightly bigger picture as well too, because I think it's important to keep that in mind. Let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, make sure you grab access to that free trading course that I'm giving away for free right now. I don't know how long I'm going to keep giving away for free, but if you haven't done so yet, first thing in the description, grab access to that 5-phase trading course that I've got. I used to charge for it, but now I'm just giving it away for free. So go get access for free, guys. Go get the help. And by the way, as soon as you put your email address in to get the free trading course, there's a special welcome video there. There's a little training there that I got. It's a bit of a bonus. So you're gonna love that as well. So let's have a look at the good old stocking market. Now, guys, short-term analysis, real short-term analysis is where is the market right now? Okay, real short-term analysis. But I must say this, that I am a very, very, very big, strong believer in, remember I said before, small picture, big picture. Small picture is about what's happening right now in the markets, okay? Is that we're getting a bit of a rally. Nothing has changed it and as a trader, this is something really important for you guys that are listening to me right now, okay? That are trading the markets. You're in, you're out. As a trader, you must be flexible with the markets, okay? Because right now, the market's in a downtrend. A week from now, the market could be starting to maybe change tune to start an upward trend. Oh, but John, you said a week ago the market's in a downtrend. Yeah, you do realize there's more. You do realize the market starts to create new patterns all the time, right? Sometimes it just continues the downtrend. Sometimes we start a new upward trend. So the small picture, what's happening right now is the trend is your friend until the end. The end hasn't happened yet. So the thing that I'm looking at for this week is really watching is that we have had a high, we've had a lower high, and then we've had a big drop down, big drop down. My thinking is this, is that maybe, just maybe, because what happens at the end of every market, we get this sort of a capitulation move, right? We get a very sort of strong move up or a strong move down. And maybe, just maybe, this move down through here was the capitulation type of move to end this bull market. Now, look at big picture, okay? Because I truly believe on the second half of this year, we're going to see a big bull market. Because inflation is going to pull back, right? We're going to see the inflation probably pull back. And I'll show you this here. So let me bring this up here. This is, let me actually take this off the screen here. So this is the inflation forecast indicator that I've been learning from Larry Williams. And this is like the bigger picture here. This is over the last sort of, what's that, maybe 4 decades there. But if I go zoom in a bit closer, this is a bit closer view on what's happening here. Inflation predicted December 2021. And as you can see, the blue line is the inflation indicator, okay? The black line is the inflation. And I've said this for a while, guys, but this is just a refresher, is that I see the second half of this year being really good. I see inflation coming back down. I see interest rates pulling back down. Now, by the way, as the long-term interest rates start to come back down, talk about interest rates here, as the long-term interest rates start to come back down, then what's going to happen, right? I'm going a bit of a thing here, aren't I? Let me bring up the interest rates right now, and I'll just show this because now I'm on the topic of interest rates. Let me bring up the interest rates here. So this is the guru.com, right? I'm just bringing up this here. Right. So what's likely to happen is that as the interest rates, as what I see happening right now is I see for some reason the long end, the 10 and the 30 year, they're probably going to start to pull back. And what's going to happen is that they're going to pull back as the Fed is jacking up these rates. And then guess what? That's what's going to create what's called the inverted yield curve. So let me show you what an inverted yield curve looks like. Just before 2008 recession, let's actually go back to here. Right, let's actually go back to the curve. Just look, there it is there, right? So we can see the inverted simply means that the short end, what the Fed's doing, and the long end, what the bond market's doing, is the short end, which means what the Fed, this short end of the short end is like very, very close to expiration. That's what the Fed moves, and then obviously the 20 or the 10 and the 30 year and so on and so forth. That's what obviously the free market moves. You know what I mean? Or government starts to buy bonds and so on and so forth, right? But this is what the inverted curve looks like, right? As interest rates on the long end simply means the 10 and the 30, because that's the long end simply means long time. 10 and 20. The short end, which is short time, is now start to get higher, and we start to get this through there. So if we have a look at it right now, we're not there yet, okay? We're not there yet. As you can see, we're still low down the bottom here. We're still low down the bottom here, and then we're still a high up here. But what's probably going to start to happen is we've seen a massive move in interest rates, so we're probably going to start to see this in the long-term interest rates, this start to go in the short-term interest rates. That's going to cause that, and then we're probably going to see a recession come maybe 24, maybe 25. So that's what I'm seeing there when it comes to the good old interest rates, guys. But back to the inflation indicator, we could see here that inflation is probably going to start to turn down real soon. And as you can see, that the blue line is the turning points, not where it's going to turn, but the turning points. And you can see the black line was the inflation, and the inflation turned roughly right when the indicator said the inflation was going to turn, right? Then in 2021, the blue line is the turning indicator where major turn is going to be, and then this is where it's going to be here. What is it saying right now? Is that we're getting very, very, very close to what? To a turning point. So we're probably going to see this on the inflation, that on the interest rates, and that's where, like, on the big picture, guys, on the fundamental level of what I'm seeing, what's happening right now, we're probably going to see a massive boom coming on the second half this year. Okay, so that's what the big picture is all about. And so if I look at the big picture, now the big picture, I've always seen that we're possibly going to come back down to these support levels first before we start to see a rally. We may or may not get that. On the Dow Jones, we're actually pretty much there right now at this major level of support. So again, this is big picture stuff, guys, big picture, but the short-term picture is we need to wait for the market to tell us. What does that mean? Well, waiting for the market to tell us is that if we're going to start some sort of an upward trend, we would start to see the market change the tune, right? So we would start to see a rally up through here, and then it may pull back through here, and then we may start to create a high, and then we might start to do something like that. What is it doing now? It's starting to create a low, then we have a high, then we have a high low, and now we're breaking these levels, and that there would be possibly the start of seeing this move to come. Make sense? So then we're probably going to see a big move up and so on and so forth. So I do see overall that we're probably going to form a bottom. I don't know whether it's now. We may continue up and close there. I was saying in last week's video, which I actually got that wrong, is that I was saying that we're probably going to come back down to the support levels first and then maybe create the bottom. So maybe we're going to do that. Maybe we are going to come back down through to here first, and then create the bottom. Again, we just need to flow with the markets and see what the market is telling us. Right now, we're in a downward trend, so I wouldn't want to be fighting this. There still is a chance of this actually having another leg down. And again, to those levels through there. So that's the S&P. This is also the Nasdaq as well too. Again, major bottom through there. If we have a look at, again, nothing has changed through here, guys. We did create a little bit lower bottom. We're still making high, lower high, lower high. Nothing has changed on the short term. And on that big picture, you can see how that if the Nasdaq did have a little bit more of a downward move, this is the big picture now on the weekly charts. If the Nasdaq did have a bit more of a downward move to the 10,000, that would be the sweet spot for the market to create a massive bottom. Because as you can see, this resistance level through here and this major support level through here, that would create a major, major, major floor in the market. So that's going to be really interesting as well too. Now let's go have a look at the GDX and obviously the mining sector. So looking at the mining sector, we can see that we're actually right at this level of support. So I wouldn't be too surprised if we actually did flush down past that support level. It's probably going to be a whole bunch of stops through there. But the big question is this, and this is where, guys, this is where a lot of amateur traders get really frustrated at what I'm about to say. Once this flushes us down here, we need to then wait to say, okay, then is that a continuation move, or is it a final bear trap? Right, final bear trap or final bull trap, right? A bit of a false breakout before we actually start to see the upward move. That's what we need to wait and see. I am very bullish overall this decade on the mining sector, but on the short-term level, we're not getting that quite yet. So let's actually see whether we can get that flush down through there, and then maybe we can see a bit of a turning point on there. So looking at the GDXJ, this is actually the GDXJ, and I'm actually really, 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 really bullish this GDXJ overall anyway. Short term, again, we're looking at the weekly chart here. But as you can see, we have this sort of sort of channel that's forming right now, where we are right now. We're in this channel through here. Once, and this is where we're going to take a bit of time as well too, traders, but once we start to get some sort of upward move like this and then a breakout, once we get something like that, then we're probably going to start to see some really, really, really big moves. So this is something that we need to really watch for over the next 6 months or so, because once we really start to heat up through here and we get this breaking of 50, then this pullback that's lasted almost 2 years, this is what we call the energy building phase. And once we finish this energy building phase and we start to get a breakout like here, then all this energy for 2 years is probably going to see this thing absolutely take off like a rocket. Let's have a look at gold right now. And there's a few levels that I'm focusing on with my gold market through here. There's obviously that level through there. I just wanted to put that level through there. All right. So there's a few levels that we're actually focusing on right now when it comes to gold. Gold right now is obviously stuck at this level of, let me take that off the screen. So we're at this level of support level through here on gold. And we're also stuck at this resistance level. So we're stuck between a rock and a hard place. Now, what actually happens with gold here? Do we continue down? And then if we do continue down, it's probably not going to be a big drop, right? We're probably only going to get down towards this sort of bottom line through here, I would say. Now, the big thing, the thing that I'm watching for is that what would give me the case of this is now changing into probably a bullish move. Like we're probably going to start to see a race to a new high. And that would be something like this. That would be see gold come up and start to get a breaking above these highs here. Because see this major resistance here and major resistance here. Now this is 1, 2, 3, 4 weeks of a month of rejecting that level. If we get something like that on a monthly basis, we're probably going to get something like this, and then we're probably going to start the race to all-time new highs. So that's what I'll be watching for over the next week or two when it comes to gold. Whether we do create that pattern, we are holding here. But if we're looking for a bullish case scenario, this here would tell me, okay, now gold is getting ready to have a move back to the upside. And this is the same for silver as well too. Silver's just still holding here. We're rejecting right at this level. If there's any case for the bullishness, again, that major resistance there. If we do, for some reason, hold here and we start to get something like that out of silver, and I'm not saying that's going to happen, traders, okay? I don't know. But if we do, then one thing I'm very confident on, if we get this, then we could probably expect something like that. Make sense, traders? Anyway, traders, hope you enjoyed this. Let's have an amazing week of trading.